So is a 401k a retirement plan? Short answer, yes, of course it is. The bigger question is it the right plan for you? Can you actually create financial freedom with it? That's what we'll talk about here. All right, so you're wondering, is a 401k a retirement plan? Naturally it is. You could just Google that and find it out. But you're probably wondering, more importantly, what can you do with that 401k plan? What's good about it? What's not? What can you actually do that could create financial freedom? Or is there even a better option? Well, I want to dig into that today in this video because let's just dive into what a 401k plan is, how do you use it, what's it work, what's good for, and what's it not good for. Okay, so 401k plan, just so you know, 401k is nothing magical. It's literally a tax code. It's 401k section K, right? That's all it is, or subsection K, whatever, however they call it. It's just a tax code. Why did they create it in the first place? The 401k plan was actually created in the 1970s. Now, this was supposed to be an executive plan, and this is where it gets a little bit tricky because the way people are using 401ks today is not what it was originally meant for earlier. See, the 401k plan, when it was created, was more for those top-level, high-paying executives. Why? Because the 401k plan works like this. You put in money with before tax dollars. So your money, they use these before tax dollars to go in, it grows tax deferred, and then it comes out being taxed. Understand the 70s, especially those mid 70s, the highest tax bracket was around 80%. 80, that's right, not 18, 80, 80. It was up almost about 80%. So the strategy was this: if they're making so much money at their job as an executive or whatever it might be, in those high-level positions, they know that their taxes are going to be like in the 80% bracket. So what if they could bring it down into like the 50s or the 40s? So they would put money into here to lower their tax bracket down in hopes that down the road in the future, they'll pay less taxes because they won't be living on high of an income. Of course, they got both of what they wished for because what happened is that not only did it put them in a lower tax bracket then, but eventually taxes did come down, especially post-Reagan era. Right? And gradually we've actually seen taxes kind of decrease as time went on. And that's where we are today. In fact, right now we're in one of the lowest tax brackets that we've had in the 110-year history of the federal tax rate. That should be an interesting thing for you because that means if you're trying to put money in a 401k plan today, you're not getting taxed today in hopes that it'll be less tomorrow or in the future, whenever that might be, 5, 10, 20, 30, 40 years down the road. Problem is, will taxes be less down the road or will they be more? Now, based on odds, it's hard to say. But based on odds, if I were a betting person, I would probably say that we're likely, especially with the way the government debt's been increasing day by day, it's likely we're going to have higher taxes down the road. Why would I try to be taxed less now when the rates are lower to then get taxed later when it's higher? That's what's changed. The tax brackets aren't the same. They're much lower than they were in the 1970s. And just so you know, the 1980s, that's when the government and the financial institutions got into bed with each other and said, hey, this is an amazing partnership because one, the government knew that Social Security was going bankrupt. They knew it was going broke and fast. They didn't have enough money coming in because the baby boomers they knew that eventually they're going to start pulling out of it and there's not enough workers to go in. Especially with Gen Xers, there's a lot less of us than baby boomers. So there's not going to be as many people funding into these plans for Social Security. So government was worried about running out of money fast, but also financial institutions, they wanted a reason for you to put money with them so they can make money off your money. And just so you know, those guys get paid whether you make money or not. They get paid a percentage of what's ever in there. As a result, they both got together and said, this is a great plan. We can give it to middle America now, not just the upper class who we're trying to help, give it to everybody. And so now it became a different kind of plan. Now all of a sudden, every American's told that they're supposed to put their money in the 401k and you get the company match if you work for a company, right? So then you're getting that match from the employer. It's free money. It's 100% returns and all these other lies that they tell you. Yes, it is free money, so to speak, but it's not 100% returns, at least not long term. Trust me, you put it into a little retirement calculator, putting in whatever money you're planning to put into a 401k plan, and then put it at 110% return because you think the market might do 10%, and you'll find out in 20 years, you're probably gonna be richer than every billionaire in the world. I can promise you, there's never been anybody who said, how did I become a billionaire? I saved in my 401k plan. It's never happened because no, you do not get this massive return. Now the match is great. If you get an employer match, awesome. Now if you're the employer, if you're the business owner, you pay your own match, it's kind of ridiculous because you really don't get any benefit. You're still gonna have to pay taxes on it later. So yeah, you just had this business that gives you these great tax breaks and you're trying to defer these taxes to another time when you don't have the tax breaks. Makes no sense. So as a business owner, 401k doesn't really make a lot of sense. If you're an employee, it could make sense, especially if you're planning to retire into your 60s or later. Because here's the other thing, there are penalties with 401ks. 59.5 rule. If you're below the age of 59.5 years old and you try to access money, you will be penalized with a 10% penalty and you'll be taxed with your income taxes. So for some people, this could mean nearly half of their money could be wiped out just like that when you cash money out before you're 59.5. So be careful with that. Also, if you get a traditional 401k, when you get into retirement, you also have to pull a certain amount of money out by age 72. And if you don't pull out the money each year after age 72, guess what? They take a 50%, that's a 50% penalty for the money that you should have taken out in the first place. So you have to take money out because the government wants to get paid, right? So they're not gonna let you defer it forever. So just so you know, there's some different rules and things you have to play by. Is it the worst thing in the world? Absolutely not. There is a purpose for it. You can use it. Heck, did you know that outside of using your company's plan, if you happen to have a 401k and then you change jobs, did you know that you can actually move it into what's called an IRA, which is also like an individual retirement account. You can actually self-direct that IRA, do a self-directed IRA, and then invest it anywhere you want, including buying real estate. You can actually buy real estate and buy almost everything. You can't buy collectibles, you can't buy Beanie Babies with it and things like that, but you can buy a whole bunch of other things to be able to invest with that money. So you can do some interesting investments. Yes, can you even do crypto? Technically, yes, you can actually invest in crypto doing a self-directed IRA or self-directed 401k. So there are options to deal with that. But if you're working for a company and they have their little suite of funds, the things that you're investing in, you'll probably be narrowed down to the traditional plain old vanilla options. That's the other thing too. 401ks do also have hefty fees. That's what they're very much known for. And sadly, they also underperform. They actually don't usually do as well as the stock market. I was looking at Fidelity's 401k funds, their target date retirement funds that most millennials will pick. Sadly enough, it actually underperformed the market by over 2% a year. Here's what's crazy. Over a course of 40 years, guess what kind of compounded return you get off that employer match that you get? About 2%. So all that employer match does, that free money you think is so amazing, all it does is make up for the bad funds that your employer gives you as options. You probably do better just investing on your own outside of the 401k plan. But again, is a 401k plan always bad? No. I'll tell you this, if you're over the age of 60, over the age of 59 and a half, you might have what's called in-service distributions where you can access that money now and use that money to invest outside. You can even throw your money in, get the match, and then pull it back out and invest it and make a lot faster money that way. So there are options that way too. But again, you gotta check with your 401k administrator to see if that's a possibility. However, now there are other options. There are other things you can do. Many people will look at the 401k and they think, oh, that's my retirement plan. That's my only option. But it's not. What I teach people is actually how do you invest in things outside of the stock market? And you can invest with actual cash on hand rather than locking up a 401k, which by the way, if you wanna get it to it before 59 and a half, the only ways you can get to it is one, you have to either have a financial emergency, which is really hard to prove. If you get laid off, maybe you can get to it without the penalty. You still get taxed though. Two, you can use it for a down payment on your first home, but not a lot. Or three, you can help use it for your college tuition, but only to a certain amount as well. So you have some limited access to that money. Now, like I said, you can actually invest in other things, but what if you invested in other things outside of a 401k? What if you did like what a lot of our clients do? They actually invest in what we call infinite banking or max ROI infinite banking. Infinite banking is actually using a life insurance policy, not the death benefit, term insurance that you always get, but you can actually get a whole life insurance policy that not just has a death benefit, but also has a tax-free savings account inside of it. Not only does the money grow inside of it, but you can also use that money to go and invest in other places too, essentially making money in two places at the same time. So a lot of our clients will actually stop contributing to 401k plans to then put it in their stead because there's not all these limitations. There's no 59 and a half rule where you have to wait till you're basically in your 60s before you can access it. You could actually retire sooner using that money and invest in other things like real estate to make higher returns than you would maybe in the stock market. So there are a lot of different options you can actually do there. Now, that's a whole nother rabbit hole you want to go down. I would suggest this. If you want to learn what options to go above and beyond the 401k, even though it could be a great option, what could you do outside of that? Subscribe to our Money Ripples channel. Watch more of these videos, especially about passive income. There are so many options that I didn't even know were available to me as a financial advisor. You can learn those as well and learn it much faster than I did. Go subscribe to our Money Ripples channel today.